Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Unity Software Inc. quarterly report. Unity Software Inc. offers a wide range of services to its clients, including artificial intelligence solutions for game development Create Solutions, tools and services for building, shipping, and running real-time 2D and 3D content Grow Solutions, user engagement and monetization services, enterprise support and consumption services, professional services, plus consulting, plus platform integration, plus training, plus custom application and workflow development advertising, and game publishing services. These services cater to various clients, including enterprises, mid-market companies, government institutions, small businesses, independent businesses, and individuals across multiple industries. Unity Software Inc. stock price skyrockets. A year of growth and innovation over the past year. Unity Software Inc.'s stock price has surged by a staggering 88.52%, with gains reaching as high as 106.63% in some periods. This remarkable increase can be attributed to several key news events and financial indicators that have collectively boosted investor confidence. Unity's strong Q3 2025 financial results were a major contributor, exceeding expectations for revenue and adjusted EBITDA. The company's growth in customer base and revenue streams has also been significant, with 1,338 customers generating over $100,000 in revenue as of September 30, 2025. The launch of new products and expansion into emerging technologies like AI and XR have further fueled the stock price surge. Unity's strategic appointments, including the appointment of Chris Fio as SVP Sales and Partnerships, Programmatic, have also accelerated growth in key areas. Overall, Unity Software Inc.'s impressive financial performance, strategic expansion, and innovation have created a perfect storm that has driven its stock price to new heights over the past year. The primary drivers of revenue growth or decline can be summarized into several key factors. On the growth side, the company has seen an increase in deferred revenue, proceeds from convertible notes, subscription revenue growth, increased advertising spend, and a strong dollar-based net expansion rate. These factors have contributed to the overall revenue growth. On the other hand, revenue decline is attributed to decreases in intangible assets and other assets, as well as declines in Create Solutions and Grow Solutions revenue due to portfolio reset, changes in customer demand, competition, and resource allocation decisions. Net income and profit margins. A shift in performance. The financial performance of a company has undergone significant changes between 2024 and 2025. Net income has decreased by $2.3 million in Q3 2025 compared to the same period in 2024, and approximately $30 million year-to-date, YTD, 2025 compared to YTD 2024. Profit margins have also experienced fluctuations. The gross profit margin has remained relatively stable at 74.6% in Q3 2025, a slight decrease from 75% in Q3 2024. However, the operating loss margin has improved significantly, decreasing from -28.5% in Q3 2024 to -26.7% in Q3 2025. The decline in net income and profit margins can be attributed to various factors, including increased amortization expense and a decrease in operating income. Additionally, higher earnings in foreign jurisdictions have also contributed to the shift in performance. The company is indeed generating positive operating cash flow. The financial summary clearly indicates this trend, with net cash provided by operating activities increasing from $203,361 in 2024 to $301,520 in 2025. This significant increase demonstrates the company's ability to generate substantial cash from its core operations, a key indicator of financial health and stability. The company's debt level has undergone significant changes in recent years. Notably, the issuance of $690 million in aggregate principal amount of the 2030 notes was a major development. However, this increase was partially offset by the repurchase of $688 million in aggregate principal amount of the 2026 notes. As for interest expenses, there were some fluctuations, but no significant changes were noted overall. The company's interest expense increased by $204 from 2024 to 2025, but then decreased by $204,000 in another instance. Now, management is projecting a mixed outlook for the company, with both positive and negative trends expected in various areas. On one hand, they anticipate recognizing approximately $197 million of revenue from commitments not yet recognized over the next 12 months, indicating potential growth opportunities. Additionally, certain business segments such as Grow Solutions are expected to see increased revenue due to technological advancements. However, management also acknowledges that other areas will decline, including non-strategic portfolio revenue, which is expected to decrease through 2025. Furthermore, the company expects to incur operating losses for the foreseeable future due to significant investments in research and development, sales and marketing, and general administrative expenses. To achieve growth, the company requires additional capital to execute strategic initiatives, and failure to raise sufficient funds could have a negative impact on its business and financial condition. Overall, management's outlook suggests that the company is navigating a period of transition and investment, with both short-term challenges and long-term opportunities. That concludes the financial summary for Unity Software Inc. Feel free to comment below, and I will be happy to answer them when possible.